The US has attacked the global economy. China hiked tariffs on every US product to 125% overnight. Prices at the pump are exploding, grocery bills are surging, and those so-called guardian institutions in Washington and on Wall Street are scrambling to keep the dollar alive. Tariffs, currency wars, Bitcoin. Welcome to Economic WW3. But here is the million-dollar question. When governments and big banks treat money like a weapon, where do you find refuge? What if your shield isn't hidden in a vault or printed in endless batches, but lives on a decentralized network powered by code? In the next 12 minutes, we will map out the new battlefield, expose who's pulling the triggers, and uncover why Bitcoin might just be the only weapon you need. So stay with me. This war has only just begun. So what exactly is Economic WW3? It isn't tanks rolling across continents. It's a high-stakes battle fought with tariffs, currency devaluations, and capital controls. Think of tariffs as artillery barges, exchange rate tweaks as stealth airstrikes, and capital flow restrictions as naval blockades on global investment. Every time a country puts duties on imports or devalues its currency, it's pulling the trigger on this invisible battlefield. Exchange rate moves happen when governments intentionally weaken their currency to boost exports. This only sparks retaliatory devaluations. Currency controls, including withdrawal bans, surprise on taxes, cross-border loans are used to scare off investors and choke out liquidity, and the stakes right now could not be higher. The one thing though is that this didn't start with Trump. In mid-2024, Washington opened fire with a protective salvo. President Biden quadrupled tariffs on Chinese electric vehicles, blasting the rate from 25% to a staggering 100%, all in the name of bringing home jobs and safeguarding union factories. Mainstream media didn't tell you that, did they? But if the parties are so different, why are they doing the same thing just as last year? You have to stop believing in this stupid circus, okay? But they didn't stop there. Semiconductors from China were also taxed at 50%, and solar cell imports faced a 50% tariff, double the previous amount. This hasn't been happening overnight, all right? Fast forward to early 2025 and the Trump administration pushed tariffs to an even more aggressive level, a 10% baseline duty on every single import, justified by reciprocal surcharges that slam the biggest trading partners with rates far above that floor. China at first just 34%, the EU at 20%, Vietnam at 40%, and so on, all calculated against what those economies charged the US. Here's the twist. Tariffs look like there's some master plan created by Trump, but Washington has been using them for years, and it only alienates them more from the rest of the world, as you are starting to see, I think. So the taxes aren't going to be felt by the people enforcing them, but by the everyday person when they're at the grocery store paying the real price of tariffs. Just think about it. Do these tariffs really bring back jobs to Main Street, or do they just raise prices at the checkout? It's the classic trade-off, political cover versus economic collateral damage. And for you, it's a reminder that when governments weaponize money, it's your wallet that often ends up on the front lines, and this is why we need crypto. Beijing didn't just match US tariffs though. It weaponized critical minerals. After cracking average duties on American imports from 84% to 125%, China slapped opaque licensing rules on 7 vital rare earth elements: dysprosium, terbium, samarium, and more. These are used in EV motors, wind turbines, and smart weapons. Shipments practically came to a halt on April 4th when exporters discovered they now need the Ministry of Commerce approval that could take months to arrive. Even Tesla's Optimus robot is affected by this. I wonder how Elon is feeling right now about his friend. China, though, have been playing the currency game for years. Beijing let its currency weaken to cushion exporters, only to have the state bank swoop into the forward market, swapping yuan for dollars and then dumping those dollars in spot trades to stem panic and stabilize the rates. At the same time, China turbocharged its cross-border interbank payments system, CIPS, and linked new bilateral currency swap lines, laying the plumbing for yuan-settled trade that bypasses SWIFT. And this isn't a bilateral spat. It's a bloc in formation with Saudi Arabia, the UAE, Iran, Egypt, Ethiopia, and Argentina now at the table. BRICS economies account for roughly 1/4 of global GDP and nearly half the world's population, and their main goal is to remove the US dollar hegemony. This is Beijing's full counterpunch. Choke off critical inputs, manipulate currencies, build parallel payment rails, and rally a multipolar coalition primed to redraw the rules of global finance. China has been getting themselves ready for the situation like this for years. They've been dumping US Treasuries since its holdings peaked around 2011. Their counterpunch isn't just about tariffs on soybeans or aircraft parts. It's about chipping away at dollar hegemony itself. As China weaves new currency swap lines and lights up its CIPS network, it's rewriting the rules of global finance. And trust me, every single investor, saver, and shopper on Main Street is about to feel the aftershocks. And the most alarming part is that they're making their own BRICS currency to rival the US dollar. Now, I've got a wild card for you, the yen carry trade. To put it simply, you borrow yen at essentially 0% interest. Put those cheap funds in US bonds yielding around 5% and pocket the difference. Simple, right? But don't let that simplicity fool you. It's been the silent Achilles heel that's been fueling Wall Street's rallies for years. However, in August 2024, a move nobody saw coming, the Bank of Japan sent shockwaves across the markets by hiking rates for the first time since 2007, since pretty much the great financial crisis, lifting its short-term rate target from 0.1% to 0.25% and slamming the door on free money. The instant reaction was brutal. Carry trade positions unwound fast, and the yen rocketed from roughly $155 down to $151. Japan's Nikkei crashed over 12% in a single session, and Wall Street wobbled. S&P 500 tumbled more than 3% as everyone scrambled to get the heck out. And if you want a full breakdown on that, check out the video on Japanese yen carry trade where I explain it in more detail. Collateral damage is already piling up. The US dollar index is down nearly 9% year to date and sitting at a 3-year low. The S&P 500 has been getting smashed. It's sunk to almost 21% below its all-time high. As confidence in the US dollar and paper assets erode, central banks have been piling into gold like it's its last lifeboat. In 2025 alone, gold is up over 30%. Spot gold blew through about $3,500 1 ounce. And make no mistake, this isn't just a hedge fund party. When faith in the system fractures, real economic disasters follow, guys. Okay, so this is just getting started. Gold's gleam is a symptom of shrinking trust in central banks and governments. I think you can all understand why that is. And for anyone watching their buying power erode, this is a stark reminder. In economic World War III, collateral damage falls hardest on you. I've been stacking Bitcoin since 2012, preparing for this exact scenario. This is one example of why it was created, and don't forget that, all right? I know you may think that, it's really popular among politicians, but it has nothing to do with politicians, guys. It's easy to get lost in the noise of regulations, but this is what really matters when it comes down to it. With this economic warfare playing out, this is exactly the moment for Bitcoin to shine. And keep in mind that gold is still down 99.99% against Bitcoin since it launched. That being said, commodity-backed coins are looking like a much better volatility hedge compared to anything tied to the US dollar. PAXG is one option if you're really keen to look into something like that. If you survive the 2014 Mt. Gox hack, the 2017 ICO bubble, and the 2020 scandemic, you know the drill. Stack sats during the dips and hold through volatility, just like we have been doing right now. Now, I'm going to share with you my playbook for bulletproofing yourself in this economic warfare. When the world gets crazy, you need options. There's no doubt about that. And we got a taste of it in 2020, and that just pushed me even more keen to keep decentralizing my life as much as possible. You cannot rely on these governments to protect you. They've proven this time and time again. First, you have to hold Bitcoin, take self-custody seriously, and keep it safe. Only then it's truly yours. Don't hold it on an exchange, or don't hold very much on an exchange, and don't get any derivative or wrapped version of it, okay? Just Bitcoin, BTC, that should be the foundation of any portfolio. If you want to diversify in times like these, there are some options that you should consider: Ethereum and Monero. Ethereum is the backbone of DeFi, and you could call it the world's computer. You're probably thinking it's down so much from its all-time high. To that I say, so what? You don't buy something to hold it for a week or two, all right? These are the things that when you buy, you hold for many years to come. You don't win by trying to nail the exact bottom. Everybody should know that. Everybody knows time in the market beats timing the market. And if you thought it was a good price at 2,000, 3,000, 4,000 in the past, then you must think it's a better value right now. As for Monero, just think for a moment, why are they delisting it from exchanges and making it hard for people to buy? Because it works, and it works well. This is your emergency escape hatch from the worst case Orwellian nightmare. But this isn't the only thing you need to diversify right now. You need to diversify everything. You need to start building multiple streams of income across the world, okay? Not just the US if you're in the US or your country, all right? If you're able to buy real estate in a different country, make yourself a sovereign individual, okay? And the first thing to help you with that, citizenships, okay? You need more citizenships. I would really suggest that, especially right now. There's no better backup than a real plan B. The feeling of having another citizenship is like no other. It's true freedom. Having options when the time comes is something that you'll be thanking yourself for many, many years to come. And I've been through this process a couple times now, through investments and through family heritage. So if you need help with how to obtain one, then reach out to us in the link below, and we'll make sure you get connected with the right people to make that happen. As you know, we take our freedom very seriously.